So I'm excited to introduce Kyle today from Multicoin Capital. I think this is a really good time to have a conversation about everything that's going on in the crypto world around NFTs and crypto economies in general. And I know, Kyle, you've had some really positive things to say about everything that's going on in the ecosystem right now. And, kind of just really excited to, hear your take on how things are going. But maybe just to kick things off, I'll hand it over to you so you can give an intro to yourself and Multicoin.
Hey everyone, great to meet all of y'all. Pleasure to be here. I'm Kyle. I'm one of the co-founders and managing partners at Multicoin Capital. We're an investment firm. We invest in the crypto space. If y'all have been poking around crypto, which I assume you have, you've probably heard of us. We run a few billion today across a hedge fund and a couple venture funds. We invest all the way from seed stage all the way through Bitcoin and everything in between. We generally prefer to invest early rather than late. We generally prefer to lead rather than follow. We generally prefer tokens to equity, but all three of those are flexible. We have a team of 14 people today, all over the world. I am based in Austin. That's where the firm is based, but we've got people in New York and China as well. Yeah, we've been thinking about NFTs for a little while. I don't think we were by no means the first folks on that train. There were others that were earlier on that bandwagon than we were, but we've been thinking pretty hard about it for the last 6 or 9 months, and have placed a handful of fun and exciting bets, some of which are public, some of which are not, but have some reasonably well-formed opinions on the space and how to think about it, and are certainly looking to invest more in it. I think that's kind of a brief intro. I think I can go any direction from here.
Cool, great. Yeah. So I guess first off, first and foremost, just to kick things off, I'd love to get your take on, what do you think makes crypto economies special? Like why are they, why are they so near and dear to your heart? Why does, Multicoin focus on this?
So I think there's a few different questions. So why is crypto near and dear to my heart is very different than what makes crypto economy special. I think those are kind of the two key questions. Why is crypto important to me personally? I think crypto is really about sovereignty. I think the underlying theme of everything we invest in, whether it's something that looks like Helium or like Audius or DeFi or NFTs or whatever, it's really about sovereignty, whether that's sovereign data or sovereign infrastructure or sovereign money. I believed that's like somewhat libertarian leaning view. I don't really identify as a libertarian, but certainly appreciate some of those values. And a couple of years ago, if you asked me this question, I would have said the same thing. But I think the biggest thing that's changed for me in the last 2 years has been COVID, and has been watching a bunch of bureaucrats tell me how I should live my life. And that like very much annoys me, and has made me kind of even more emboldened on my belief around crypto and the value of sovereignty. So that's why I do this, and that's what I think the point of the mission of Multicoin is to accelerate the adoption of self-sovereign software. So that's question number one. Question number two is, why are crypto economies special? Crypto economies are special because these things trade like shitcoins, and like that is a feature, not a bug. Introducing speculation into the earliest stages of ideation creates problems for sure, but it is a superpower in and of itself. And introducing the ability for people to speculate, people to play games, to have a token that has a price, to have the financial media report on that price, introduces so many amazing new emergent effects around those kinds of social dynamics. And that is the key thing that makes crypto tick. Speculation is absolutely a feature, not a bug.
Awesome. So what do you think, like why do you think NFTs are important? And like, do you really view them as kind of like building blocks for something bigger, or, just in and of themselves, are they just, purely special to you?
Yeah, so a simple and extreme and correct statement about NFTs is that everything in the world is an NFT. Like actually most things in the world are NFTs and are not FTs. And that is an obviously correct statement, like real estate being the most obvious example of this. But I mean, look at toys, cars, TVs, laptops, whatever. They're all NFTs, so to speak. And so in that sense, it's a very important technology. But I also think that framing is too simplistic and misses most of the nuance that's necessary to kind of appreciate it. I really try not to use the word NFT internally. I find it to be a counterproductive term. We don't call fungible tokens FTs. So why do we call profile pictures and art NFTs? Like, yes, I understand that's like the technology that powers it, obviously, but like it's actually counterproductive to group them together just because they happen to share a piece of functional technology. So we almost never talk about NFTs internally. We instead talk about the kind of different functional use cases of NFTs. And there are a handful now that have emerged. One is kind of profile pictures or just brand identity type things. Obviously, you see this with the CryptoPunks and the apes and all that stuff and the penguins and whatever. And then, kind of a derivative of that will be like buying clothing and other accessories, right? But this is just kind of online identity stuff. So that's kind of category one. Category two, it looks like something like Top Shots, which is more like collecting, and it's like patronage. And like art falls in this bucket. Oh, look at all the Fidenzas and the Ringers and whatever. Look at Beeple and all that stuff. The people who are buying that, it's primarily a form of patronage. And there's certainly a large market there. The third you could argue is like domain names, which are actually quite functional. So ENS domains, Solana domains, those kinds of things. Probably a fourth is gaming related assets. So you're seeing this now with things like Decentraland and Somnium Space and then buying real estate, but also you're seeing a lot of people now play with in-game assets as NFTs. Star Atlas is probably the most ambitious in this regard. There's probably one or two categories I'm missing off the top of my head, but like those are kind of the different functional areas we're seeing today. There will be many more functional areas over the next few years for sure. The right thing to do whenever thinking about anything about NFTs is always be very clear with yourself. What is the use case it is going after, and then frame the discussion around that use case.
Gotcha. Yeah, so you touched a little bit on kind of some of the various different projects and applications and so on. I'm curious, from your perspective, like how did we get to where we are today, right? Like what are some of the important projects that stood out to you as you've, been doing this for a while? Who are the individuals, to watch, and like what are the really impactful ideas that you think you've learned along the way that have really, kind of helped you hone your grasp of how you view the ecosystem?
Yeah, so I mean, there's been a lot of important creatives and artists who've pushed the space forward. Unfortunately, I can't invest in those. I mean, like I can't legally, but like I'm not qualified to buy individual paintings or artworks or Fidenzas or whatever. There are people who are specializing in that now, but that's not what we do. The biggest problem as an investor in the NFT space is that if you're not going to go buy the assets yourself, the investable assets there's not that many. There's stuff like Rari token. If OpenSea had a token, obviously that would be investable, but they don't have one. There's a few others here and there, but there's not that. Arweave, I guess, falls in this bucket to some degree. Arweave has kind of benefited from the NFT craze. But the hardest part about this whole market has been just figuring out what can you invest in if you're not going to buy assets directly. And that's where we've certainly struggled as well. We haven't done, I think, as much as I would like, but we've done some stuff. Unfortunately, our largest check we've written is not public, so I can't talk about it yet. There's a lot of smart people in the space. I mean, y'all probably follow crypto Twitter, but I mean, folks like Brian Flynn and CryptoPunk 6529 or whatever. And I mean, there's a whole bunch of them. Yeah, Gabby and that whole crew at YGG and Axie and Jiho. And I mean, as you start following those guys and seeing who they interact with, Alex Gossman, and it's pretty easy to kind of follow those people, and then the web kind of branches out from there. I certainly follow them pretty closely on Twitter, see what they're talking about, and I chat with a lot of them kind of privately to get their viewpoint on things. But yeah, those are kind of a lot of people who are pushing the space forward.
Gotcha. And just on the ideas, like what do you think are the ideas that have kind of really stood out to you along the way?
The thing that the use case I'm most excited about for NFTs is creator monetization. And specifically, I want to say crypto native creator monetization. That's very much a personal preference thing, and like is not necessarily indicative of the best market or the easiest market or the most profitable market to be in, which happens to be the one that I'm the most intellectually curious about. And it's like I love TikTok. I think TikTok is the greatest thing in the world. Like I follow all these random, primarily kids on, I mean, they're between 16 and 25 for the most part on TikTok. And they're so funny and like so creative with whatever they do. And it strikes me that they are all very much under monetizing their likeness. And when they do monetize their likeness, it's like they put like a Bang energy drink, like the guy holds it up in the video and like talks about it. And it's like very corny and poorly done. I think there's a much better opportunity to do that a lot better. And I think probably some combination of NFTs and social tokens are probably the kind of the key enabling technologies to get you there. Now, how do you package that up and provide the tools to the creators so they can use these things effectively? How do you make sure that these things aren't abused, because they will be abused? There's a lot of social norms that need to develop around how creators need to use these things, but I'm very, very, very excited about that design space
Gotcha.
for this technology.
Yeah, that makes sense. I'm curious actually then, kind of following up on that, what do you think are the biggest problems right in the space right now, like that people should be kind of tackling?
Yeah, I mean, it's probably discoverability of these things. Right now, OpenSea is kind of like, I guess, the default place to go, at least for Ethereum-based assets. The Solana ecosystem now is actually thriving on its own and doesn't have a place to go. Solana art, and like, I'm not super familiar with it, but it seems to have some problems, although I'm not sure what they are. FTX is obviously making a really big push there right now, and they may own that market in the next 2 weeks, who knows? But so that's one problem. I think the bigger problem though is that you need to unbundle OpenSea by vertical. And like I'm like 90% certain that's going to happen over the next 24 months. What does that mean? So like a pretty meaningful percentage of OpenSea's volume is people buying CryptoPunks and apes and stuff, and then like setting them as their profile picture on Twitter. And like the primary purpose of the JPEG is to set it as your profile picture. And then maybe you go to the Discord too. Mm-hmm. But like, obviously Twitter sees this happening. And like, I think Twitter is going to create a marketplace that competes with OpenSea. And the key feature of the marketplace is going to be, if you own an NFT, right, you own the JPEG, then in Twitter, whenever you hit settings and upload the picture, you can say, choose a JPEG that I own, and Twitter will show a check mark in the UI saying that you in fact own the thing that you've posted as your picture, right? Mm-hmm. And Twitter can do that, and OpenSea will literally never be able to do that. And like, I think the moment Twitter does that, they're going to subsume like, 80, 90% of the volume for profile pictures. Also just given Twitter's distribution naturally on the demand side. And so like that is going to happen. I don't know when it's going to happen, like it's going to happen. And if you look at the other verticals, you look at art assets, I can see a similar type of unbundling happening. It's less clear to me, like there's not a Twitter vector like in the art market like there is here, but something similar will likely happen there. I think within games, if you look at like Zed run horses and stuff, or you look at Axes or whatever, there's a lot of nuance that comes from these assets and how those assets have been used in their own games that's not tied to the metadata of the asset itself. And OpenSea does a very poor job today of rendering all of that correctly and showing it correctly. And so I think there's a big opportunity there to unbundle certain types of utility-based assets as well. And so to be clear, I'm not like, I like OpenSea, it's a good product. I just think that their problem right now is they're too horizontal, and people will deliver much better verticalized experiences. There's this famous essay from like 6 or 7 years ago that made its way in the VC world, and there's been like a bunch of iterations of the same essay that like shows a screenshot of like the Craigslist homepage, and it's got like cars and shoes and electronics and furniture and whatever, right? Mm-hmm. And then there's another screenshot that shows that, and it's got like all these tech companies with like an arrow pointing at each vertical, and like they all each got unbundled. right? Like the same thing is probably going to happen to OpenSea. And as that happens, I don't think it means OpenSea goes to zero by any means, but that just means you're going to be able to have much better product experiences for each vertical. And so I think that is probably the most important thing that needs to happen kind of at the ecosystem level.
Yeah, that's a super interesting idea. I'm curious, I guess, outside of what you've already spoken about, what other types of projects are you super excited about?
I really am interested in things that are really crypto native. So, like when the internet first came out in the 90s, a lot of the first things people did with the internet were like actually a lot of publishing firms. So like Time, the parent company of I think Time Warner or whatever, they own Time Magazine and CNN and a whole bunch of these other properties. They actually like recognized the internet was disruptive to their business, and they like put up websites and they had stuff in the New York Times, and like you went to the page and it like had a magazine cover and you had to like flip the page in the UI. It was like very stupid. It wasn't digitally native. New York Times had a website, and like the New York Times page, it refreshed every 24 hours instead of like as people posted articles, which again is like obviously very stupid. But like what you see happen typically is as these new technologies and media formats come out, people try to map the old thing to the new thing like very directly, and it like always produces a suboptimal experience. And I see that happening today in NFT land for sure. The obvious example being art. It's just like, hey, I made a 2D bitmap or a JPEG. Like, okay, maybe it's pretty beautiful and maybe someone does buy it, like fine, but like, guys, you literally map the old thing to the new thing. Like we can do better than this. So I'm very excited about things that are really crypto native. And there's different degrees of crypto nativity, if that's a word. Probably the most extreme would be like loot or noun or n. I guess those three are kind of all in the similar bucket, where like they're like as crypto native as you can get. There's stuff like Axie, which like is like kind of crypto native, but I would say not really. The Axie people will tell you it is. There's stuff like EVE Online that's like a little more crypto native, but similar kind of category. There's stuff like generative art, which is pretty interesting, where you can use kind of entry from the blockchain to produce art that has some crypto nativity to it, which I like. But generally, my preference is to invest in things that are like really, really, really uniquely enabled by crypto and that almost eschew like the old world models.
Gotcha. Yeah, that makes sense. So I guess where do you think all the work that's being done right now in sort of, NFT land and crypto world is going to take us?
I mean, utopia, dystopia, I don't know. I'm excited about creator monetization. I mean, the people are going to build some really, really cool MMORPGs using this stuff. Yeah, like those are the two big areas. I think the use cases for NFTs and like real estate and title records and that stuff is like very far in the future. I don't even think about it at all. Mostly think about unregulated industries where you can apply it for people to make money. And then helping people make money in creative new ways is kind of my primary focus.
Got it. And so maybe a little bit of a question for you is like, do you think we're in a bubble right now for NFTs?
I don't know. I don't have a strong opinion on that. We don't try and time tops and bottoms. It's not what we do. So I'm not sure. I'm gonna go 50-50. I don't know. It's possible we're like the bubble is popping right now and we're kind of deflating, but I could see this thing rebounding in the next month or two. 50-50.
Fair. Okay. And then so I'll ask one final question for you, and then I'll kind of open it up to the audience if anybody has any questions they want to ask on their side as well. You can feel free to type it in the chat, and I'll kind of say it for you, or you can unmute and ask your questions. So last question for you is, there's a lot of kind of discussion this summer around, kind of value add that VCs have in the for crypto protocols, especially around things that happen with Sushi Swap and Lightspeed and all the things that happen there. I'm curious, what's your take on kind of how VCs can help crypto founders succeed?
Yeah, so most of the hubbub, I mean, look, I'm a VC, so like I'm super biased, so feel free to discount what I say, but VCs provide value in ways that others you generally can't along a few dimensions. One, if they're actually good VCs, they have a long time horizon. So they buy your tokens and then they're like not trying to sell them or flip them. That if you have if your fund has a 10-year fund life, like literally your LPs cannot get their money back for 10 years. That's a very strong way to be long-term oriented, where you don't have to be afraid like the guy's mom's going to get sick and he has to go buy a house or buy hospital bills or whatever. So there's real value in having long duration capital. And look, there are some individuals who do operate on a similar timescale, but very few individuals actually operate on that timescale because it's for the most part irrational for individuals to do so. So there's real value in duration that is underappreciated. I think the second thing is that VCs are full-time focused on helping portfolio companies. I look at, for example, like there's like these builder group investment DAOs. I think like the Lao is one of them, and there might be one or two others. I forget. And I've no problem with them. And their pitch is, hey, we're builders too. And like that's fine, but like, if you need me, like if you need one of your investors to go spend 8 hours to get something done, like, are those guys going to go do it? Like they have a full-time job. My job is to help you. So I think people don't appreciate that there are some tasks that only investors can do, whether it's a function of relationships or something else or knowledge or whatever. And if you need them to go do the work, if they have a full-time job that's not investing, they probably won't do it. Third, I think it's pretty important is just like types of networks. One thing I've observed across the crypto ecosystem is like, I am a crypto generalist. So we have our hands in DeFi, we have our hands in some art stuff, we have our hands in the creator monetization stuff, in Audius and Helium and exchanges and whatever, right? We have our hands kind of everywhere. I can't be an expert at all of those things. There are now people who are experts in every one of those little fields. Some of them work for us and we have people who cover a sector specifically, but most oftentimes they're builders who build within those respective sets or those respective areas. It's actually quite value accretive to entrepreneurs to have generalists who are basically, I am seeing everything happening everywhere. And in my brain, I'm always waiting for some wires to cross and say, I saw this thing over here. This is relevant for this guy over here. And then facilitate an intro, let them know what it is, whatever. And again, if your investor base is just builders, you're less than likely to get kind of that degree of breadth around you. I think there's also value in having just like more follow-on capital. We invest our first check, whatever, it's $1 million, whatever it is. But like, if you need more money, like we're usually there for more money again, because we have a capital base. I think the last thing people will say, and this varies pretty widely by investors, just like, can you actually help get shit done? For example, if you need to talk to Sam Bankman-Fried, like I know Sam very well. And if I message Sam, like he'll respond and we'll get the meeting. Other people won't necessarily. And everyone has different relationships with the ecosystem, whatever. But like some people really need to get in touch with other specific people. And investors like myself can provide a lot of that signaling that's really helpful. So I think those are some of the general types of forms of value we provide. I think most of the public hate is, I think it's 80% unwarranted, but like 20% probably warranted. And like, I think that the biggest source of frustration is like typically VCs get into the lower price, which is generally true. And people feel like it's not democratic or whatever. My response to that is I wish securities laws and capital formation laws were better. But also it's just a challenge, right? If you're an entrepreneur, you need to raise $1 million or $2 million. If people are putting in $10,000 at a time, it's just taking a 30-minute phone call for a $10,000 check is a very bad use of time. So it's just one of those things that you have to have a kind of a minimum level of scale to make it work. And there's not that many people who are individually going to write $250,000 checks. So it's just a tough thing. The market has gotten better in, I think, a lot of ways, but it's by no means perfect. I get the source of frustration. I think most people who complain about VCs haven't worked with really good VCs.
Got it. Okay. All right. So I'll open it up now to the audience. Like I said, if you guys have a question, feel free to either drop it in the chat and I can read it for you. You can raise your hand, or you can just pop in if you, unmute and pop in if you find a sec here. I see actually a couple here in the chat, so I'll read those first. So Danny says, DeFi question: on-chain options protocols are having a tough time. What is it going to take, and what do you think about Ribbon Finance creating a market for people who really don't care about capital efficiency?
Yeah, we thought about options a fair bit and have pretty pointed opinions on it. I think the reason they haven't taken off is because market makers aren't quoting good spreads. The reason they're not quoting good spreads is because the collateralization requirements are really poor. And so they can't quote tight spreads. And so like the only basic solution to that is to be able to use perpetual contracts as collateral inside of options if you're writing them. The Ethereum community seems to be having a tough time with this. If you look at the two largest perpetual markets today, those are DYDX and Perpetual Protocol, neither of which is on ETH Layer 1, notably. DYDX is in its own little zero knowledge thingy made by the Starcore guys, and like iterating and building from that is very difficult, and like tokenizing your DYDX perp position and then using it as collateral in an options position in a zero knowledge environment, like I don't even know how to do that. Like that, I don't know if that's possible or not. Maybe, but it certainly sounds pretty hard. If you look at Perpetual Protocol, it could be done, but again, because it's like the VAMM thing, it's a little strange. Not saying it's impossible, but it's just tricky. Until you can have perpetual contracts as collateral for the options, I don't see how you're ever going to get tightly quoted options in DeFi. I just don't think it's possible. And by the way, you can see the converse of this if you look at Deribit. Deribit has some perpetual volumes, but their perpetual volumes are almost exclusively market maker hedges. So it's people who write options, someone buys the option and they hedge by buying the perps. And ask anyone who trades writes options in Deribit, they'll tell you like 90% of the perp volume is that. So yeah, I think you kind of have to have that. I don't really see how, given the technical constraints in Ethereum, that's ever going to really work. In terms of Ribbon, I like Ribbon. Ribbon's super cool. Julian's a very talented founder, and I like what he does. Ribbon is, I think, kind of the Uniswapification of writing options. And it's cool. It works, obviously. Is it ever going to compete with a professional market maker? No. But it's a good first step. And there is value that, look, if you believe for whatever reason that vol is going to be suppressed, then you want to write an option, then it is the easiest way to do that. So I'm a big fan of it in terms of democratization of finance, but I don't think it's ever going to compete with professional market makers.
Got it. Okay, Josh Raleigh, do you want to come in with your question?
Yeah, sure. Thanks for taking time, Kyle. I'm curious. I've heard of a number of people internationally using play-to-earn model, things like Axie Infinity, as a means of generating kind of their full income. Is that something that you see sort of continuing and being sort of this global floor, global alternative to low-wage jobs, or is it something that kind of only works in a rising market and we'll see that use case kind of supplanted by more sustainable long-term options?
Yeah, so play to earn is not a new concept. The idea of paying people to do stuff was invented 5,000 years ago, right? So not a new idea. Yeah, it will definitely exist a lot more in the future than it does today. It's the real question is going to be actually, there's actually already parts of this you can see today. It's just not widely documented. But if you look in a lot of the big MMORPGs, World of Warcraft, EVE Online, KOTOR, Knights of the Old Republic, or whatever, they already have parts of their economy where there's like grinding, where it's like, oh, you need to go like pull a bunch of gold out of the ground or get whatever resources occur in somewhere in the system. And like getting those is just grinding. You even see this to like a lesser degree of like, hey, I have to just go do this quest to get this item, to like make a potion or whatever. And it's like not hard. You just need to go do it. And like you already have haphazard, sometimes somewhat well-formed, sometimes kind of haphazard gray market economies in a lot of these types of games around these activities. That's been happening for like 10, 15 years or so. That's definitely going to continue and almost certainly going to accelerate. Crypto is likely to accelerate that. So I think that will continue to exist. And yeah, you will have, basically grinding, right? Like for whatever reason, people want artificially scarce assets in these virtual worlds. And instead of getting those themselves and expending time, like they will pay other people to do it. That absolutely will be a thing.
Thank you. Okay, so let's see. I got Alexandra Takei. You have your hand up.
I was close. Takei.
Okay.
Yes, I think actually on the video game topic, I actually work in the video game space, and so I was wondering about actually similar to his question, right? Where we have things like in World of Warcraft, like WoW token, right, where people are farming for certain items, whatever. But all of those NFTs are basically being created by developers, right? And I think like that's still really interesting, and that the inflated values of these NFTs, even something like Axie, right? Those assets are being created by a team of developers that sit in-house at a gaming studio like Sky Mavis or Blizzard or wherever we are, right? And there's like a certain bar of quality that I think like those places are maintaining. How do you see that sort of coming down the line when you like, you were mentioning a lot about UGC economies, right? And someone who like might be paid for modding or stuff like that. How do you see that being involved with people who are creating their own assets, right? And maybe like in-game engines like Roblox or like, Unreal, and making sure that like the veracity of like sort of like what we're getting out of it is still valuable, right? Because I think like you kind of mentioned that we were like, oh, for some reason people want to pay money to have these like rare in-game assets, right? But I think there's like a standard of quality that is being ensured by like a centralized institution.
Right. I mean, I think the answer to that is like, I mean, like, if you buy, I'm gonna say if you buy a Mercedes, you like expect it to be of some degree of quality. If you buy like, I don't know, I'll just make up a Peugeot or a Fiat or whatever, it's probably a little lower quality. If there's like a guy who like made a car in his garage and there's no brand on it at all, that's like pretty sketch. Right. And like, this is kind of the point of brands, right? And signaling to consumers. So I think in these kinds of environments, you'll have a similar thing that will emerge and you'll have, entire brands will be built in these universes that signal some premium value or lower value or whatever, just like we have today in every class of consumer good.
Okay. I have a question here in the chat from Orion. How should founders think about evolving SEC regulation? Gensler's threatening to call every crypto a security. Any thoughts?
Yeah, not legal advice, not legal advice. And I'll say it one more time, not legal advice. From what I can tell, the SEC is primarily focusing on DeFi protocols. That intuitively makes sense because the SEC's job is to regulate trading things like the NASDAQ and the New York Stock Exchange. They also obviously do regulate the companies that issue those securities as well. The challenge the SEC has is like there's too many tokens and too many teams. And it's like pretty obvious that like making everyone file an S1 is like obviously wrong. And so it's like not terribly clear what they should do. Well, the SEC has to deal with issuers, they have to deal with exchanges, and those are two distinct and then all, just leverage venues but like just things that trade. And then there's just the assets. Those are two distinct things. If you're the SEC, you get a lot more influence per unit of time by focusing on the places where people trade risk. So Uniswap, synthetics, whatever these things, compound Aave, whatever. And so, I think that they're exerting the most pressure on those types of people, because those are the places that facilitate trading of risk. And also the way that the laws are written, it's the most black and white in their favor. Like if you look at, mirror assets on the Terra ecosystem, or you look at synthetics assets, S assets in the synthetics ecosystem, like I can't tell you a single person who I respect that would say those assets are not securities. Like they are so obviously securities. And they're going to be a modicum of suggestion that they aren't. And so, they're going after the people and the venues that they have the most obvious jurisdiction over. The challenge they have going after just the broad range of issuers is you have this Ripple problem right now, which is like, and if you're following the Ripple case, it's not going as well for the SEC as you would think it would. Again, I don't know what's going to happen there or not, but it's not like black and white, certainly. And so going after a full range of issuers is, other than like outright fraudulent ones, is like not a terribly productive use of time. So like probably DeFi teams will face more scrutiny than non-DeFi teams. And again, that makes sense because like the SEC's job is to regulate financial markets. But like if you are, I don't know, I'm just going to pick one of our portfolio companies, Helium as an example, and like you make hotspots and like you are literally building a wireless network in the world, it's like not obvious that the SEC should have jurisdiction over that. Now, maybe you think HNT is a security. I get you can have that debate, but like the people are literally building a wireless network, and like that is facilitating real world economic activity. It's just like, why would you try and prevent that from happening? So I think generally, probably for the next 12 to 36 months, non-DeFi founders will be in a better position than DeFi founders for kind of this reason.
Yeah, that's interesting. Natalie has a kind of a follow-up here in the chat as well. She says many DAOs are issuing ERC20 tokens for governance and fundraising. This seems pretty clearly to be a security and sidesteps things like KYC laws. What do you see as a real risk for these investment DAOs? Maybe kind of related to what you were just discussing.
Yeah, I'll say it again, not legal advice, and again, not legal advice. The SEC and the CFTC and FinCEN and other large American regulatory agencies generally do not like throwing people in jail. Like that's like not good for the world, or for them, it's not fun. It's like bad for society. It's all bad. They do have the power to do it. They do it very selectively, and they usually only do it in the most egregious cases. Even if you look at like BitMEX, which I would argue was actually pretty far on the egregious scale, like he got off with some civil penalties or something. Arthur's going to jail. And so, your question was, what's the risk? And like, I think the risk of facing criminal charges is quite low. Will you face civil charges? I don't know, maybe. Like, will you pay a fee? Maybe. Will you have to, I have to fill out these dumb questionnaires for like Multicoin of like, have you ever been, like, has the SEC ever pressed charges against you for violating some statutes or whatever? And so like, if you ever intend to have a job where you may need to fill out those forms, you may have some problems. But like paying a fine is like, doesn't really matter. Your life is not going to be ruined. Again, not legal advice.
Gotcha. Alexander, I see your hand is still up. Did you have a follow-up, or was that just up from before? No? Okay. Okay, so let's see. We have Dominic in the chat, he says, at what point do virtual goods markets like Fortnite, V-Bucks intersect with on-chain tokens? And will that be a catalyst for more mainstream adoption?
No idea when. Yes, it will definitely be a catalyst. Forecasting timing on these things is very hard. Tim Sweeney actually recently on Twitter, like that's probably 2 or 3 weeks ago, in response to someone else's comment, said, yes, we're following blockchain. We do not currently have plans to integrate it into Fortnite, something to that effect. So not anytime soon in Fortnite. A lot of game publishers are thinking about these ideas. Any little large game publishers are unlikely to incorporate this into any existing major IP anytime soon, because the scale required to do so is quite large and nothing has proven itself at that level of scale. I'm pretty bullish that that Solana will be the thing that, you know, gets them there. But, you know, like, I think we're still a while away before they're even going to be comfortable committing to that. So it's going to take some time.
Got it. Okay, let's see. Andre says, hi, Kyle. Thanks for doing this talk. What are your thoughts on virtual real estate, i.e. parcels of land sold on Decentraland and other metaverse platforms in exchange for cryptocurrency on Decentraland via Mana, for example? Is this real estate asset there to stay, in your opinion? Any comments on virtual real estate space would be welcome. Thanks.
Yeah, so virtual real estate is pretty difficult to reason about, but I have some ideas. So one, in virtual worlds, you can teleport, or you will be able to teleport. There will probably be some notion of property rights. You probably won't be able to teleport into people's homes, but you will probably be able to teleport and get around the town or whatever relatively quickly. So the value of hyperdensity that comes from places like New York or Tokyo, for example, is unlikely to persist. I think there will be some density value or some density premium in certain locales, but it's hard to believe it will mirror that of the physical world because of the fact that you can teleport. But like, if I don't know, if there's like what's it called? I don't know, if there's like a park, like Central Park or whatever, like being across the street from the park is going to have a higher value than being a mile from the park. This is like a simple example. I think some notions, or actually some kind of mimetic things that you see in the physical world will get mirrored into the virtual world in that way. Not all of them. Some will break when you do that analogy, but others will hold. But overall, I think density will be less highly valued because you can teleport. I think the real big question for all of these things like Decentraland and CryptoVoxels and Somnium is, why are people going there? Various companies have been playing with variations of this idea for like 20 years. The Sims was kind of sort of the first variation of this, but it was in like a single player mode, or like it was just, you know, literally you and AI. And then Second Life kind of came around, and then like Sony tried PlayStation Home. And then you've had like Animal House or Animal, whatever the thing was Nintendo did. And, you know, now you've got, you know, the Decentraland and these other 2 or 3 other ones, whatever. So you can tell people have been playing with these ideas for like a very long time. And I'm not like intimately familiar with all of them. But I think generally the thing most of them have struggled with is like, why do people stick around? And that's been somewhat difficult. I think if you compare those things I just named against things like World of Warcraft or EVE Online, like those people stick around because it's like there's some fantastical universe and it's cool and they want to go like raid, you know, caverns with their friends and like get the special sword or whatever. And there's like some degree of camaraderie and fun and like shit talking. But like I'm just gonna like lump that all together and just call that fun. And if you want to generalize from fun, you can just call it utility in that virtual world. And then you can get kind of, you know, like the store can be like a place and whatever, there's like a bar and you can go hang out with people and talk and stuff. Anyways, coming back to the question of like, what do you think about the land? I think that you need to like have some use for the land. And right now it's mostly just like enthusiasts, like flexing and like experimenting is mostly what's happening there. My guess is that like if you're going to build the first crypto native game that like gets big, like Star Atlas is what kind of comes to my mind, but you know, we'll see. I don't think you're going to like use the land that's in Decentraland. Like that is, why would you if you're the Star Atlas developers, right? That's just kind of dumb. You'll have your own environment with your own real estate. Obviously, that would be thematically aligned to your universe, and the colors and the shapes and everything has to kind of match. And so I generally think that the existing people who are doing this are approaching it from a supply-centric view of, hey, we built some land, here's some land, like please buy some land and do some stuff. As opposed to probably the gaming-centric view, which is, hey, let's make a fun game, and people will show up and play the game, and then like they'll want to buy like whatever the valuable real estate in that game. I find the latter to be much more probable than the former.
Great. Okay, so Senvar in the chat says, hey, Kyle, what are your thoughts on Ethereum layer 2 scaling solutions such as Polygon? Do you think these are good enough, or do you think there are gaps in their design?
Yeah, I've very strongly formed opinions on this. So one, I would not call Polygon a layer 2. I'd call Polygon a sidechain. Polygon today has almost nothing to do with Ethereum other than some like vague ethos hand waving and like a bridge to Ethereum, but like is almost entirely unrelated otherwise. They may do this. I mean, they bought the Hermes thing or whatever, and they're going to try and turn it into a ZK roll-up thing. And I don't know. Like it's possible that like works. It's like really, really hard and unclear and difficult, and who knows what's going to happen there, but maybe that'll happen. We'll see. But for now, it doesn't really have anything to do with Ethereum. The other ones are like Arbitrum and Optimism and Matter and Aztec and Starkware are probably the other layer 2s, and some of those are optimistic and some of those are zero knowledge flavors. You know, Optimism and Arbitrum are live now in like kind of limited format or whatever, but like you can use them, and like the transaction fees on Arbitrum are like $1 or $2 or thereabouts, but it's not like a fraction of a penny. I can tell you with 99% probability, there's no chance the future of software is it's $1 to move money around. It will be a fraction of a penny. And so I just find the optimistic flavor to be like totally, like they're off by 3 or 4 or 5 orders of magnitude. I don't think they're even close in what they're actually delivering. It's obviously an improvement from the status quo, but like not even close to what is necessary. The zero knowledge approaches being pursued by Starkware and Matter and Aztec, and maybe there's some other ones too, but I think those are the 3 big ones, can get you to, you know, fraction of a penny land, which is necessary. The challenge with all those is that like composability and programming models in zero knowledge land are just very, very immature. It's totally possible that like they never become good enough to be generally usable by like the mainstream people. I'm not saying that they won't, but like that's the distinct possibility. There's a real chance that zero knowledge stuff is still 3 or 4 or 5 years too early. I'm not saying that it is, but like it's reasoning about when these technologies actually become ready is quite difficult. And zero knowledge stuff, I'm fairly certain is not there today, but you know, could get there. But overall, just a very, very, very difficult problem space.
Gotcha. Okay, so Sam in the chat says as well, he says, would love to get Kyle's take on staying power of NFTs that are attempting to replace consumables, collectibles, art, pictures, video. A lot of activity there, especially in the sports world. Would be curious to hear whether that feels like a fad, or said differently, do you think that there needs to be another layer of exclusivity or better way to for consumers to actually interact with these products?
For sure, the idea will stick around. I'm like not a sports collectibles guy. I've never bought like sports cards or whatever, or like I was never a shoe guy. So I'm not like super familiar with that culture in that world, but it's been going on long enough that like, it's obviously not a fad. Like this is 20, 30 years strong by now. So it's not going away. Again, I commented earlier, but like taking the old media and just like putting it in the new media format is usually the wrong thing to do. Top Shots V1 felt like just take the old thing and put it in the new thing. Obviously they made a bunch of money and a bunch of headlines. I guess that's good, but like it feels too simplistic. So I do think that media will need to evolve in some way. I don't know what's happening there specifically, but I think something needs to happen. And yeah, you know, that will all happen. The other really big question for all of these things is just like, how do you show it off? There's real value that, you know, you're 13 years old, you have your Michael Jordan card, your friends come over and you can like show them your card, or you take it to school or whatever. It's just much harder to do that today in NFT land. That if you can really solve that problem, that I think will increase the value of all of these things. Makes it easier to flex. So it creates more desire for people to flex.
Totally, that makes sense. Okay, next up, A. Sharm says, how do you think about valuing protocols like Arweave or Helium? They've done phenomenally well. If we look back a priori, is it mainly powerful network effects that exist in both protocols and the great teams that will execute on their visions that mainly drive your thesis?
So there's different styles of investing. Some like investing in a red ocean versus a blue ocean, for example, is very different. Investing in primitives is very different than known products. So it's hard to generalize. On Arweave and Helium specifically, what I would say is Arweave's network effects are quite a bit weaker than Helium's. There are some network effects on Arweave, which is that like, hey, you have this big pile of data, you have money in the system, AR has a price, it has some liquidity. But basically the price of AR and the liquidity of AR is really the primary moat in that whole system, because that's what gives it the economic security so that you can believe the data will be stored there. Is it possible to recreate another AR type asset by forking Arweave? I think for a sufficiently sophisticated team, it would be doable. I think it's unlikely, but it's possible. I don't think Arweave is so big that like that's, you know, impossible. In the case of Helium, it's pretty different. Helium's network effects, I think, are much stronger. In the case of Helium, you know, you've got, I think, 170, 180,000 hotspots that are live right now. And there's another 600,000 or 700,000 that have been ordered, but not yet shipped. And the network effect of Helium is those hotspots. Like that is physical infrastructure that has been deployed into the world. Even if you take the code base of Helium and fork it, even if you ship your own hotspots, like and create your own network, well, like the first 700,000 people who were going to buy hotspots have already bought them, you know? And so you actually have a real structural disadvantage in spinning up an alternative network. I think at this stage would be extremely difficult to compete with Helium.
Yeah, gotcha. Okay, next up, Victor. And I think maybe I'll do just maybe 2 more questions and then we can wrap up. I want to be mindful of your time. So Victor says, nice board there, Kyle. I guess commenting on the board behind you. Thanks for the talk. What are your thoughts on play to earn, such as Axie Infinity? How do you think these economies will evolve in the long term?
So I'm not super familiar with the economic model of Axie. There's a lot of these things you have to tune the economics of the system and deal with kind of growth in prices and growth in users and those kinds of things. I don't know if Axie has nailed any of the above or not. Maybe they have, maybe they haven't. In general, I mean, again, I think this question was asked earlier, but you know, play to earn is not a new idea. We invented the idea of paying people to do things 5,000 years ago. There are going to be games that people will choose to spend money instead of grinding, and there will be people who choose to grind to receive money. So that will be a very big idea that will continue.
Got it. Okay. Let's see. Last question then in that case. From Harsha. Hi, Kyle. What are some thoughts? What are some of the hurdles / challenges ahead for companies like Audius to go mainstream? Does it make sense for Audius to work alongside incumbent labels, et cetera, like Spotify did? Or is there another strategy to acquire content? Or is the strategy to focus on super fans and upsell merch and other exclusive access, et cetera?
I can't comment too much on Audius' strategy because a lot of it's not in public and I'm not privy to all of the details. what I can say is that if you are Audius and like your primary competition is SoundCloud, Spotify, and Apple, and YouTube, going against those guys head to head is pretty dumb. You're never going to beat them head to head. So you got to think of alternative wedges, and look at places where they are ignoring, and then kind of go on those things and let those things grow and compound in new ways. And I can tell you, Audius has been doing that, and I think we'll continue to do that. Beyond that, I can't say too much.
Gotcha. Yeah, I mean that's insightful nonetheless. So yeah, I mean, I guess you have a kind of a virtual room, if you will, full of builders and business folks, designers, et cetera, from the Stanford ecosystem. I'm curious, like any parting thoughts, anything you'd like to share with us before we part ways.
Yeah, I would say just try and get into the space as best you can. The space is very welcoming. There's all these DAOs and Discords and places. It's a lot easier than you think to build a name for yourself. And it's not trivial by any means, but it's not insurmountable. And if you want to be in crypto and make a name for yourself, the most important thing is to just jump in and do stuff, talk to people, publish, and you'll be surprised that how quickly you can build some brand value for yourself.
Great. All right. Well, thanks, Kyle. This was great. Appreciate you sharing your thoughts and everything. I'm sure everybody found it helpful. And to you all that would hear, thanks for coming. Thanks for joining. Follow us on Twitter, join our mailing list and whatnot, and for future events. And yeah, thank you all. Hope everybody has a wonderful Wednesday.
Thanks, everyone. Bye.